All right, here we go. So, first review of the year. It is January 5th, 2024. We're going to focus on the daily range, which is using the premium discount layout to determine high time frame turning points during the day. We're going to use this as our template for fighting incorrect bias. We're going to use the 1 hour PD arrays to see where we're going to respect and draw to. And we'll break that down into 15 and 5 minute to show the entry model at a specific time of day. So here's a nice little review going into today. The very first thing I want to look at as we get started is the day time frame. It's really essential to show where the daily range high and low should be. So for today, Friday, January 5th, I am looking at what I expect to be a wick low on the week. So that means I'm probably going to be running counter, at least for some portion of the day, to the general narrative of whatever's happened during the week, especially if it's been a trend. Now, this has definitely been a trend. It's after Christmas. This happens virtually every year. Not every year, but virtually every year. There's a huge run-up at Christmas, into the first of the year. And then sometimes immediately it drops, and then sometimes it's like a week later. But this plunge is just exactly what you expect basically every year. So Friday is going to form the wick low of the week in most cases. So what am I looking for in the daily range is I'm looking for the first PD array below us, below price here, first PD array above us here. So there's my daily range. Could you argue that it's the wick high? Yes, you could argue that. Could you argue that it is the previous low? You could argue that. For me, just having watched price long enough, I felt like blending a couple of those areas together, getting to the high of this inversion fair value gap was enough, but I also could have chosen this fair value gap. So, it really kind of doesn't matter that much because it's really just supposed to give you a premium discount relationship. And in most cases, it's not going to give you that much of a distinction as far as where premium and discount are going to lay out on the day. So then we're going to drop down into the hourly time frame. Let me just make this a lot bigger. And you'll see how I laid out for the morning. And give me a second. Visual order. I'm going to take these yellows off of here. Interval and below. Oh, never mind. I guess I can't do that. So you can see the daily range high and low, and then I lay out a premium and discount array on that. And all of our premium arrays are here, and our premium arrays are here, and our discount arrays are down here. So they have them all laid out. I don't see anything that I've missed. These are all accounted for. And in this case right here, this is a little bit of an interesting situation where you have really what amounts to a 4-hour block there. Now, depending on when the 4 hour starts counting, see, in this case, it actually just doesn't look like anything because of when the 4 hours started counting. But as you look at it in the 4 hour, or as you look at it as just 4 consecutive hours, it's easy to see that as someplace where we might actually get some support if we get above it, regardless. So this is how this plot lays out. And I'll note that at 8 a.m., we're down at the daily range low and closing above it. 8 a.m. closes above it, actually. First hourly to get above that. I want to make a clear point about the lack of displacement here. So you get 1, 2, 3, 4 pushes down. You do run that all the way out, but then we close back above it. So that's a good clear sign of reversal. At 8 a.m., you have that information. At 8 a.m., you have the information that you failed to displace lower after taking liquidity and you've run back higher. Small piece of information. So then I want to annotate the 15-minute here and just point out what I'm looking at and what I'm caring for. 8 a.m., I'll just go and make a quick point about that. Let's go look at that real quick. and go up to Forex Factory and see what news was on tap for today. So at 8:30, we had non-farm, right? So we expected that. Meaning we expected a large move. So that move takes out these lows, reverses and closes back higher, and creates the 1 hour. Now we're back above the 1 hour order block, and then having created the 1 hour breaker, it actually does that right in the 9 o'clock hour, or 9 o'clock 15 minutes. Then that 9 o'clock thing. That's when it actually does it. So I want to point out as I'm walking through this, what I'm focused on is the 9:30 time frame. What you actually see here is the session get all the way above my Asian breaker that was created for the 9:30 open. As I put on my location inclusive of risk, you see that price gouges down into it during the 9:30 period, and that the target is in the neighborhood of the daily range high, certainly above the Asian range, certainly above the afternoon session, and filling this in. That's a main target, but extended target, of course, the daily range high. Doesn't have to be a guarantee or anything like that. And that's how we're set up for the day. We're actually looking at this here as a long, and we're looking at prices down here as a long, exclusively and only. The afternoon, it could set up to where this looks like a short, but it doesn't. It doesn't do it until noon. My period for trading is from noon back, not really noon, it's more like 10:30 to 11, but back to 9:30, and that's all. So that's all I look at. But you can see that it comes back, it tests this area again, creates a new breaker, holds it temporarily, and then runs it back down to where we'd originally prepped for before closing out the day on a small rally. So if we take that down one step further, you can get into the real business of taking the actual execution. As you bring the 15-minute breaker across, you see that it pierces down during the 9:40, the 5-minute period starting at 9:40, tests down into there before it actually ends up rallying up. And then you see that there's no real opportunity down here to get into a long on a new breaker. Now you do get it on a recapitalized breaker. So this should have held when it came down through the first time, and it didn't. And then this looks like a clear reversal. So you could have gotten into that there right at 8:55, 9 a.m. That's just a nice little trick there that happens from time to time. But you got to be careful with that because it's easy to trick yourself, especially if your bias is wrong. And that basically is it. So now if I want to go down to the 1 minute just to round this out very quickly, we're almost done here. 8 minutes. Okay, there we go. You see that the 9:30 breaker is created at the open. So at 9:30, the price that we care about getting above is this one right here. So that actually happens directly at 9:32, which is good. That means that we're looking for any pullback into my area here, my zone, my support. And that happens at 9:40 on the dot, which runs higher, creates a fair value gap, which is tested right at 10 o'clock, and then off to the races. You could have called that a silver bullet, whatever. That terminology works for you. And then it runs up higher. The risk on that particular trade is here. Right. Down to there. And same target. So you see, but that's about 28 points if you take it right as it comes into the fair value gap. If you decide, because you've got you're waiting for time, which means you want to take out the 10 a.m. You want to take out the 10 a.m. or I don't want to say that correctly. You're looking for a reversal directly at 10 a.m. It comes down into this fair value gap. So let's actually play that out from a real sequencing standpoint. How would you actually execute on that? I'm going to move this off. Well, number one, I'm waiting for 10 a.m. And this gap is already filled before 10 a.m. So it's filled at 9:57. So what am I looking for then? Well, there's nothing. What I'm looking for here is that I can take this breaker with a stop below. How I could do that? See right here. For my model, it works like this, like that. That's where there's where your risk is. There's your entry and your risk at 9:59, or you could take it at 9:58. Doesn't matter because it's right before 10. But there's your opportunity and risk. So if I were to put that on right there, it works out to be roughly 21 3/4 points for roughly 107 points. But if you were to scale out entirely, it's 660. So that's still almost 3 to 1 on that particular trade at the 10 a.m. turning point. So those are two viable opportunities in the AM session that I see based on my model. And again, what I'm focused on is the daily range, building out where premium and discount align, where the 1 hour PD arrays are, where the 15 and 5 minute nested breakers are, and I'm waiting for time. That's it.